And welcome to RealAg Live today, everybody. Yesterday, maybe I told a little bit of a fib. I said that we were going to do this every Tuesday and Thursday. And I fibbed. We are going to do this today as well. It's Wednesday. So welcome to RealAg Live, where we have a guest and we get as many of your questions in as possible. If you do have a question, please leave it in the chat box and they'll come to me and I'll get to as many of them as I possibly can. Today's guest is Brian Voth of Intellifarm. Hey, Brian, how's it going?
Good. How are you, Shaun?
Hey, man, I'm doing great. Lots to chat about here. I'm looking forward to our markets discussion. Hey, Brian, first, tell me a little bit about Intellifarm.
So Intellifarm is a market analysis and advising company. Obviously, my background has been in analysis and advising for, what am I on now? 13 years, I guess, through 3 different companies. But we make individualized marketing plans, working with clients throughout the year to help them carry them out and really try to take the emotion out of grain marketing to make more profitable decisions at the end of the day.
Okay, let's start off today talking about canola.
Okay.
We had, there's a little bit of a debate on where the acres are going to be, whether they'll be up or down. I'm not sure what your position is on that, but I think a lot of this leads probably to 2 things. One is what people think the carryout actually is, and then 2, where's demand going to be the rest of the year?
I mean, the acres numbers, we were leaning towards the higher side for this year, and a lot of this comes back to kind of what we talked about a couple weeks ago with the acres numbers, is that canola has been one of the most consistently profitable crops in Western Canada. It doesn't have the really extreme levels and highs or lows, but it's just consistently profitable. Part of it is from genetics. We're getting better breeds, better varieties that are allowing that yield to stay up there through a variety of conditions. But also, even from a price perspective, I mean, it feels like the price fell out from below us, a year and a half ago when China claimed that they were going to stop buying canola. But in reality, prices have still actually been pretty good. And aside from just the yield and the price side, when you look at the actual profitability side of it, it's just, I think, a very consistent crop to grow. So our idea is still that I think acres are probably going to have been up from what Stats Canada said. Obviously, proof will be in the pudding when the next report comes out at the end of June. But that's the way we're leaning on it, again, from a profitability aspect.
Okay, so we've got November canola trading just north of 479. It's kind of recovered from the mid 460s as of late. A little bit more green on the screen as of late than the past couple weeks. Could we actually etch a little bit closer to that 500, or are we sort of capped out at here at this below 490 level?
The resistance is going to be, we've stalled out here in the last week or so. We have had a really good recovery off the bottoms. We stalled out for the last few days. I think it's just kind of consolidating. There's been nothing saying that we're turning lower at this point, but you're going to run into a lot of resistance at that 485 level. So that's really the level that we're looking at for some more future sales. If it's got any more gas in the tank, I think 500 is a very tough level for us to break through, because you don't have, when you start talking about the stock side, you don't have a tight scenario on canola as of today to really fundamentally push it beyond that level. What canola's got going for it technically is that the funds are holding a relatively large short position, and they've been buying those positions back here. And that's really probably a bigger reason why canola has managed to work its way higher here by $15 a ton or so off of the lows recently.
Yeah, and I'm showing everybody some of the details of the quote right now on the screen, Brian. Europe, though, has been a bit of a demand, I don't know if savior is the right word, but it's definitely helped us compensate from some of the losses on the Chinese market. Yeah,
Australia basically ran out of exportable canola because of their drought. Ukraine had some to offer, but not enough to fill the demand. And so really, Canada's the only other main place to source canola from. And so, we've been filling needs into the biodiesel market. Europe is just a tricky one to get into with all of the non-GMO requirements as well, though. So from a human consumption standpoint, it's a tough market to really fulfill when you think about how little of the Canadian canola crop is actually non-GMO versus GMO. So we can fill the biodiesel aspect part of it which obviously in the last 2 months has taken a big hit in demand, just like ethanol, just like any other energy source out there. So that's been good. But, I don't think you can ignore the fact that China has still been buying canola in a, decent amount, let's say, in the last 18 months. But also the amount of canola oil that they've been buying is, I think, a piece that a lot of people don't really talk about.
Yeah, it's still to this day, I'm still hearing from people saying, China has banned Canadian canola. It's not a fair representation to what's there. There's issues, and Richardson's and Viterra can't ship canola to China, but there's not an outright ban.
No. And even there, Richardson and Viterra can't ship to China directly. But how much of this canola is finding its way through an intermediary going into China is a whole different question. And one that's really, you can't really answer that one, obviously. But even China's direct purchases, it's a fraction of what they've done historically, but it's still actually, what are we at, 2 million tons this year right now? It's, a little over half of what they would have done historically, but it's definitely not zero.
Good old canola laundering. Every commodity has its version of that. Okay, so it's oilseed sister soybeans. We know that acres are going to be lower in Canada. It really doesn't matter in the grand scheme of things, especially compared to the U.S. How are you looking at the soybean market right now?
I think the U.S. acreage numbers are a little debatable in light of the economics of corn right now. The 97 million, I think, was optimistic to begin with. And now you factor in what's happened with ethanol demand and where prices have gone. Although, that said, the U.S. side, seeding decisions or planting decisions don't necessarily always seem to be based on the economic outlook of things. And I think the soybean acres, it's no surprise that soybean acres are going to be way up this year in the U.S. because they took such a huge hit in the last 2 years, and especially last year. So you're going to see a rebound in acres no matter what. I think it's just a matter of how much of a rebound. But, once corn planters are rolling, it's also really tough to get farmers to switch out of that. It's easy to keep going once the planters are already rolling versus switching to soybeans. So, when you look at the crop progress numbers and the percentage, they're way ahead of planting on both corn and soybeans, but those percentages don't actually translate back to an acre number. So I think soybean acres are going up, cheaper to grow, first off, in light of, what's going on in the corn market, but also the outlook on soybeans, I think, is a lot better than it is on corn as well. Now, when you start throwing in government payments, this all may mean absolutely nothing, though.
Right. Well, and that's been kind of the hard part to figure out, because that's where sometimes I go on the corn numbers. When I see USDA's corn number of 97 million acres, everybody kind of scoffs at it, but it's going to be, I believe it's going to be lower. I'm just not super bearish on the number because I just don't see a lot of incentive to not grow it, is kind of my feeling.
I would think corn is probably closer to where we were in 2018, around 94 million. I think that's a more reasonable number. I don't think 97 is going to be there unless, like I said, the only caveat to that one is because of how fast planting has been going. If they just decided to hammer down and put corn in the ground regardless. So, it's a hard one to judge right now. It's the polar opposite of where we were last year at this time, with things slugging along and, an absolute disaster in planting. And they still managed to put in a big amount of corn acres despite the conditions last year. And this is why I always tell people too, never underestimate U.S. farmers' love of growing corn. Despite anything else, there is this love between U.S. farmers and growing corn.
When I look at the soybean chart on November, we've been in a really tight range. Does that tell us anything that, if we were to break to the upside of that because of increased China buying, that would be a real bullish indicator, or just do you put much stock in the charts?
Well, I have a technical background by nature, actually, so I spend a fair bit of time looking at the charts. And, I was just looking at the November bean chart and seeing there's a pattern showing, a target of, I think, 883 short term is what it looked like, and which gets us kind of back to some of the highs prior to everything falling apart here, but still obviously a far cry from where we've spent the last number of years at. Fundamentally, though, you got to think, even when the U.S. had a billion bushel carryout, the prices were really only 40 or 50 cents lower than what we see today. So when you start talking about a 420, 450 million bushel carryout, I think the lows are in the soybean market. Now, if China comes in and actually starts buying a bunch of soybeans, I think that the upside potential is there. I think the downside risk from where we are today is probably quite minimal, though.
Interesting. Hey, I got a question here from Avery, who says, hey guys, what's your thought on wheat? I go to the store and they've been out of flour for weeks. Have the processors being shut down due to the COVID, or the storage bins emptying? Great content. What do you think, Brian?
Definitely not from bins being empty. I mean,
we wish
it would be nice. What?
We wish.
Yeah. It's, wheat is one of those ones, out of any crop to market, wheat has always been the toughest one because it's not subject to the big supply disruptions or supply and demand disruptions that some of the other markets are, because almost everyone in the world can and does grow wheat of some sort. When you look around the world, there's almost a wheat harvest every month somewhere around the world. And so it's not really subject to that supply situation. So it's not because of bins being empty. It's more the supply chain disruption more than anything. And it's, I guess, no different than toilet paper or whatever. People are starting to hoard this because of baking or whatever. It's just going to be a blip in the system, and then away we go. Now, inside of that, I think the U.S. situation is quite interesting this year because for the second year in a row now, we've got record low acres, and we're talking 100 years since USDA numbers started being collected. We've got the lowest wheat acres in the U.S. in history this year, which, is on top of last year's lowest numbers in history. So not that the U.S. is a huge player, obviously, globally in the wheat situation, but the other part that's hard to analyze about world wheat stocks is that half of the wheat in the world is held in China. And it's hard to get stats out of there.
Okay, so I hear this all the time from analysts. How do we actually believe that number? Is that like some sort of inflationary volume to suppress prices? And boy, do I sound like a conspiracy theorist. But I hear this all the time. So what is, can we believe it?
I don't know. Should I go get some tinfoil out or
break it out, wrap it around? Let's go.
Well, and that's why when you look at USDA numbers, they've actually started to put numbers in on the world situation that, okay, here's the estimate for the world situation, and here's the estimate for the world without China. And so you actually have a separate line on these balance sheets for that because of trying to estimate, how much of the stock is actually sitting in China, which doesn't impact the global supply and demand, because if it's sitting in China, it's not leaving China to go somewhere else. It's for their own domestic use. So you have to kind of take that out of the picture. So it is an estimation, obviously, and it's just, like I said, you start to see the same thing with corn, how much corn stocks that China sits on. They've started to take that out of the picture because, 2 years ago, there was all of a sudden this massive revision in the balance sheets because of what the stocks were sitting in China, supposedly. Now, again, whether you believe that or not is a whole different question and a tough one to answer.
I got a question here from Louise, who asks, and I mentioned earlier that soybean acres are going to be down in Canada. Corn predicted in Ontario to be up, and I cannot remember off the top of my head what the Western Canadian corn number was. But Louise asks, what % do you think grain corn acres will be down in Canada for plant 20, Brian?
Percent down? I don't think the percent will be that big, maybe 10, 15%. It'll be the farms that were on the verge, growing corn when the prices were good because it made sense. I think those acres, those fringe acres, you're going to lose. The long-term corn growers, they're not changing their rotations that much. There may be, a quarter here, a quarter there that gets swapped out. And even with our own clients, we've had some some quarters swapped out where, okay, it was intended to go into corn, but now with everything that's happened, it's actually better to grow oats on that piece or wheat on that piece anyway. So they've swapped it out of corn into that. But again, you're talking 10, 15% maybe, I think, down versus what would have been intended. So not a huge change.
Like I saw the Manitoba crop update that came out, was it this morning or yesterday, where it talked about, if we don't get some nicer weather here soon in Manitoba, we are going to see some people switching out of corn into a cereal. But once again, it's is it market moving? No, it's more of a domestic issue. Maybe some things get switched around, but it's not. Like, it's not like they can't find corn elsewhere. So I don't know how, sometimes on the soy, the bean and corn number here in Canada, I'm just not sure how much to actually talk about it because there's, 200 million acres of them in the US. Is that fair or not?
Yeah. Canada's not really even a drop in the bucket when you think about it in terms of corn and soybean production or acres or anything like that. And we certainly have no bearing on the price overall. It's more regional based than at that point. And sure, it's weather based. Like in Ontario last spring, a lot of corn got pulled out just because it was way too wet to get it in the ground. Back at home, Manitoba, anyone that's kind of, west of Portage, it's really wet. And now you're starting to get, towards planting deadlines. But even there, the deadlines aren't until between the 25th and the 31st of May. So there is still time to get corn in the ground with full crop insurance coverage.
Yeah.
Yeah.
Viren asks, and he prefaces it with definitely not hemp, but which crop will see the greatest gain in acres this year? He says pulses. What do you say, Brian?
Greatest gain in acres? Yeah, I'd probably agree. If you're talking pulses as lentils and peas combined, I would agree. Primarily coming out of Saskatchewan. And this is why I know when we talked about the acreage number two, we were wondering whether they didn't survey anyone in Western Saskatchewan or Southern Saskatchewan because of the drop in pea and lentil acres that was shown on the report, which makes no sense, I don't think. So I do think that in terms of biggest gain in acres, yeah, pulses make sense. Oats is actually going to be another one that'll be kind of right up there, though, because of how strong oat prices have been in the last 2 years. We had a big increase in oat acres last year already, and although the Stats Canada report did show an increase, it wasn't as big as I think it actually will end up being in the end, particularly when you just rewind our conversation 2 minutes and growers switching out of corn and putting in cereals. Oats is a pretty good contender given where the prices have been.
Yeah, and oats is an example of a crop that we do impact the market because we are growing a substantial amount of the North American supply of oats. Garrett asks, update on mustard, peas, and durum. There's some winners in there. Durum's a winner.
Yeah, so durum acres would be another one that's going to have, I think, a pretty decent increase, just given the price, which a lot of was driven based on poor quality, obviously, last year, and lower acres in the last couple of years. So durum, I think, has a pretty strong year coming for 2020. Now, again, we'll have to see exactly what those acres are. I don't think we're at risk of oversupplying the market, but it is still tied somewhat to the other market as well. Peas, when you start looking at peas as a whole, acres I think are going to be up this year, but the bigger driver on that one is that the acres are going to be higher on the green side because of where that price spread has been. And, even I was looking this morning that greens are still carrying roughly a $3 to $3.50 a bushel premium over yellows.
Yeah.
And so you're going to see a bigger increase in green acres versus yellows. And that I don't think will really impact the yellow price, but the green price, if we have a good crop, is likely to come back more in line to, an average, let's say $2 a bushel premium over the yellows.
Be smart in your marketing. Is that what you're trying to say?
Yeah.
Was that a subliminal hint?
Was it subliminal? I thought it was fairly obvious. I don't do subliminal that well.
I thought I saw $11 for green peas. Is that about right?
Yep, and I think about $7.50 on yellows, so that's where the $3.50 spread is coming in now.
I said this yesterday on RealAg Radio that if you look at the typical like dryland Palliser Triangle area of Western Canada, and we're getting rain today, which is like, didn't think it rained anymore in parts of the Palliser Triangle. Lighter ground. It's been very dry the last 4 years. So we have crops like peas, lentils, durum, flax that can be grown in that region. If they get rain in the region, it may want to be one of the most profitable areas of Canada. Like, there's some crops lining up here if you take care of your marketing.
Well, yeah, and obviously growing aside, I think marketing always needs to be taken care of and approached, strategically. And again, like I said at the beginning, take the emotion out of it and what do the numbers show. I often get the question like, I've got peas or I've got durum. Like, what should I do? And my first question to everyone always is, what is your cost of production and what is your profit using today's prices? And, without giving away the secret of what we do, obviously, but that pretty much answers any question right there in terms of should I sell or should I not? Now, how much you should sell and everything like that is a different story. And this is what I say, it's not all just based on price. You have to factor in yield and price to see what your profitability is. And the only way to know profitability is if you actually break down your cost of production. And it's shocking to me today how many farms still don't do this.
Yeah, it's easier to figure out the revenue side of the equation, like, right? We sort of look at it that way, and we judge a lot of our pricing, and this is better than anybody. People judge their pricing based on sort of a qualitative what sounds good in that very moment, but in marketing, emotion can get the best of us, right? So, what is a good price as the price moves higher, we tend to shift our emotion in terms of what is the right price for us, right? As we see canola go 9 to 10, it's like, ooh, if $10, that's pretty good. If it goes to 10, it might go to 11, and all of a sudden we can find ourselves back at 8.50, and those kinds of things can really, really hurt us if we're not proactive.
Right, and that's again, we get hung up on these numbers, and you can basically go across any crop, and it's like, okay, what's a good price for canola? $11. There's no explanation why, but $11 is a nice price for canola, right? Just like $7 spring wheat, or $7 yellow peas, or you can go down the list and come up with what people call a good price for any kind of crop, and it's not based on some quantitative measure. It's just that, at $11 canola, I know I'm making money, but then it's like, well, at what yield an $11 canola are you making money?
Right.
Because there's a whole different aspect of this again. And so, again, we try and take that out of there and say, okay, $11 is nice and you're making money at 11, but hey, guess what? At 1070, you're actually making, 15% ROI or 18% ROI. And we need to take advantage of that because you've got cash flow needs coming up. And maybe the market does go to 11. And if you sell at 1070 and the market goes to 11, I don't see that as a bad thing. If you don't sell at 1070 and it goes to 10, what's your emotion going to be at that point, right? Aside from mad at the marketing advisor because they didn't. we got big shoulders, so it's okay.
Take the brunt of it. Is there a crop right now, as you look across the Canadian landscape, is there a crop that most concerns you from a price decline standpoint where even like as you sit today, the price may not be good, and so people are hoping for something higher, but they're not exactly assessing the downside risk from this point?
If you'd asked me this question a month ago, I probably would have said corn in Canada too, because one problem is, we've already seen a pretty big depreciation in corn prices in Western Canada, and I don't think that there's a huge amount of downside from here on corn prices. But there's a lot of unpriced corn, from the 2019 crop still. And now we're seeing, bids in that $4, $4.20 range, something like that. And buyers can buy everything they need at that price. And to put that in perspective, 8 weeks ago, it was $4.70, $4.80. And fortunately, we're not in the position where we have a lot of bushels left, generally speaking. We did sell quite aggressively when we saw that $4.70, $4.80 price because just we kept struggling to get beyond that. And we said, we need to sell another big chunk here. And it's a good thing we did. I mean, obviously we weren't predicting absolute demand destruction in the ethanol market, but we know we're profitable at those levels. We had a really good yield last year for most guys, and we made the decision to sell and take that risk off the table.
Jim Hale of Lancer, Saskatchewan, he is in the Palliser Triangle. He wants to know about the potential downside risk in the pulse market right now. Obviously, we talked about the upside and how it's a bit of a good story at this point. Is there downside risk right now?
Doubtful. When you look at the last few years, we've gone from, a couple of years ago when India put their tariffs on everything, we had some pretty hefty supplies of pulses around. And we've gone from a very heavy stocks to use ratio to now very tight stocks to use ratios. And even with an increase in acres, and this applies to both lentils and peas, even with a heavy increase in acres this year, we're actually still looking at a tighter balance sheet for 2020 than what we saw for 2019. So to me, unless if there is an absolute record crop on both of these things and huge demand destruction, I think we've seen our bottom on both of these lentils and pea markets, really.
Okay, Ken has some feedback here, and I think he makes a good point. I think this is kind of in trying to make marketing decisions, here's where there's like a struggle. What do I do? So what Ken says is, hey, this is on the cost of production discussion. That's by far my biggest pet peeve. When every analyst says you need to know your cost of production and sell above that, lots of years that's impossible. Of course you should know your cost of production, but it affects my marketing very little. So I hear this on the cattle side a lot. Like, hey, I can't lock my like I tried to lock them in, but I couldn't lock them in at a profit. How do you balance that need to know your cost of production, but what if I can't actually book above that?
So the way I approach that one is we have two different marketing plans for every farm. There is a pre-harvest marketing plan and a post-harvest marketing plan. And your cost of production is different unless if your budgeted yields ended up on exactly, or your harvested yield ends up to be exactly what you budgeted off of. Your marketing plan or your cost of production switches, because your post-harvest plan now reflects your actual yield. And if you had a higher yield, obviously your cost of production has come down. If you got a lower yield, your cost of production has gone up. But inside of that, we also have 3 different break-evens that we're looking at. And I think this is where we put a lot of weight on cost of production prior to harvest, because we know based on average yields, here's what we need price-wise to break even. And now I even look at 2 different break evens, 3 actually, I guess. There's a cash break even. And so this is, what do I need to cover every cash cost that I need to grow this crop? So now you're talking seed, chemical, fuel, fertilizer, land rents, basically things that if you don't pay them that year, people are going to be awfully upset with you, I'm suspecting. And
probably.
Yeah, well, if you can get away with it, that's fine. And that to me is absolute bottom line. You do not sell below that price, because if you do, 100% you're now going backwards. The second break even is all costs. So in this, you put in non-cash costs. So in that, you've got things like depreciation. You've got things like land opportunity cost, which is a whole different topic that a lot of people don't understand. But if you own land, you have an opportunity cost on that owned land, as well as even your own wages, things like that. So you add in non-cash costs, that's your second break even. Anything above that is now profit. And we always have a break even for a 20% profit ROI as well. So we actually approach it in 3 different ways. And we also set a maximum, prior to harvest, what percentage of a crop are we willing to sell, even if we're at a profit, because you still have to manage the production risk of it as well.
Why 20%?
20% ROI, it's an optimistic target on most years. And this is 20% by crop, not 20% over the whole farm. So if you can make a 20% ROI on a crop, and there's some years you'll be well above that, if you happen to have that really spectacular yield, and for whatever reason we've got good prices, you could be well above that. But 20%, because of the big fluctuations in profitability in farming. You think about an average industry, if you start hitting 5, 7, 8%, 10% profit or ROI, you're kind of laughing. But because farming has so much variability up and down in profitability, I think we need to aim higher when things are good, because you know that there's going to be times that you have to ride out on the bad side.
Makes sense. That's cool. Ken responded and say, "Hey, well explained." That's pretty cool. That's
God, I can help. I love talking about cost of production as much as everybody hates talking about it. So,
well, it does give me a bit of a headache. It's not as fun as the revenue side. Come on, the cost side is a grind.
It is, but it's also, when you do it right, it's actually very enlightening, I think, as to where the costs on your farm are actually coming from. And then we built in the ability to actually benchmark farms against each other. So we've almost tried to make it into a little bit of a competition. Like, hey, why is that farm, $5 an acre cheaper on their fuel bill than I am, or whatever it might be? So you can actually benchmark your farm against the other farms to see.
Okay, we're running out of time here. Another question from Louise, who says, what do you think is the number one ROI crop in Canada right now that can be grown in most areas?
In Canada. It's an awfully large geographical range to try and answer that question.
What do you think is the number one ROI crop? Maybe, well, yeah, in Ontario we're kind of limited on the amount of crops that are there. With corn and beans taking up the predominant amount of the acres, but overall, what is, maybe it's only a Western only crop. What do you think it is?
If it's Western only, I'm still most profitable is going to be a specialty crop, and that's usually the case. But now again, you're also drilling down, I think, quite geographically. I'm still going to stick with canola. It might not be the most profitable crop every year, but it is just consistently profitable. Love it or hate it, I mean, it's consistently profitable.
Yeah, it's not one where, like, flax is an example where, like, if you got flax from the last 5 years sitting in a bin, cha-ching, if you can afford to do that. It's sort of like canary seed.
I was just going to say canary seed was the example I was thinking of.
Building warehouses to store all your canary seeds so that 1 year that the market lifts, you can cash in. But canola is one where it's a consistent profit maker, and you can market in that year, right? It's not one that you have to multi-year store and really take a cash hit in order to win, right?
And you bring up an interesting point about the multi-year thing, because we've tracked this and whatnot, and rarely does it ever make sense to hold a crop over from 1 year to the next. So, our goal is generally to have bins empty by the time the next harvest rolls around. It's rare when you start thinking about the cost of storage and time value of money and everything like that it actually makes sense to hold a crop over. There are the few cases where it does, but not that often. And so when you hear how much crop is in a bin come August or something like that because they just haven't sold it, it always makes me cringe as a marketing person, because you look back you have an 18 to 24 month window to sell a crop before and after harvest. And it's somewhere in that 24 months, there has been an opportunity to do it, guaranteed. So
Okay. Comment here from Devin, who says, I like the comment about planning for a 20% upswing. Helps a guy keep perspective if you hit a home run, so you know why or where you succeeded and can stay modest. Thanks for the comment, Devin. Good stuff. Hey, quickly, what do you think about small reds?
Probably going to stay in this 28 to 30 cent range for the foreseeable future until we see the next acreage report. If those acres come in quite a bit higher, like we think they could in June, then buyers are likely going to back away until we actually see what the harvest is like. If it ends up being a smaller crop because of lower yields, well, then they're still going to be well supported. But you got to think, we've got a bigger acreage number in all likelihood, and prices are now at 3.5 year highs or 3 year highs, I think, as of right now. We did touch some 30 cent or 29.75 cent numbers there versus, what were we, 15 cents 12 months ago? So I like the fact that they've doubled in price.
I think we might have hit on it already, but let's hit on it quickly. Mustard.
Mustard is not one that I'm that well versed in, mainly because it's such a small market and none of our clients grow it. So I'm not going to be the one to give a good answer on what to do with mustard.
Okay.
My best advice would look up Chuck Penner on Twitter, because left field commodities. He's going to be the one that can drill down on that one far better than I ever could.
There you go. Well, I appreciate that. We got here. Hey, good stuff. I think that's all. The rest are all just commentary. There's the viewers are having like a conversation amongst themselves. At the same time, they're asking us questions. So this has been fantastic. Hey, Brian, really, really appreciate it. Thank you very, very much. Oh, wait a minute. One last question. Faba beans.
Oh, you got to pick another one that I'm not well versed on.
Welcome to Western Canada, where somebody can grow 10 different crops.
All in one farm.
Yeah, it's crazy. Absolutely crazy. Okay, no faba bean coming. That's fine. Hey, everybody, thanks a lot for tuning in today to RealAg Live. Tomorrow, we're going to have a representative from the Canadian Cattlemen's Association to provide an update on the cattle industry. Hey, Brian of Intellifarm, thanks a lot, buddy. I really appreciate it.
Thanks for the invitation.
Okay, now that everybody's watched RealAg Live, go over to Rural Radio 147 on your Sirius radio dial there and listen to today's episode of RealAg Radio. There's a fantastic discussion today with about China. It is going to be, you're not going to want to miss it. Fantastic stuff with one of China's biggest experts on China. Thanks a lot, everybody. Thanks a lot for getting real and getting connected with real agriculture, and we'll see you again tomorrow. Cheers.